Go ahead, George.
The first thing on the agenda, you fellows have to make a motion to have a chairman for your committee this evening. And obviously, I guess people who are at home wouldn't, I mean, a lot of them might know who you are. I know Paul Ivanauskas, Martin Bernard Dumont, Larry Uwe, Dennis Keefe, and I'm sorry.
All right, Brian Quinn.
Brian Quinn, just so that everybody knows who's here.
Just to expedite things, I'm actually going to move that Larry Uwe be appointed chairman based on both his audit experience and his long tenure on this committee.
Second.
Okay, all in favor?
Other nominations?
All in favor?
Yep. Okay.
In other words, you drew the short straw.
Yeah. Well done, Larry.
Hey, Paul, just to clarify tenure, I think you serve on audit committee longer than I have.
Okay,
Because of
fair
AdCom,
enough.
under AdCom.
I know, but with the vote's done, Larry.
That's right.
By the way, just for the record, I've been married for 37 years, and I'm still having a hard time with my wife's name, or whatever. I don't do good with names, if you guys haven't noticed, or whatever.
So I guess, since we already did the election, so the next thing on the agenda is to review and discuss fiscal year 21 audit.
Yes,
Bob?
Robert Brown.
Yeah.
Good evening.
Yeah.
I'm Bob Brown. Our firm is did the fiscal 21 audit. The senior on the job and the person who handled most of the grant single auditing was going to come tonight, but he was ill, so he couldn't make it. What I want to start off with is a review of the financial statements. I want to do them in a little different order because these statements are kind of complex, and there's really like 4 or 5 different sets of statements involved. So I kind of want to do a handout and kind of start from the back of them and go through what each one does.
By the way, I believe all these are actually coming from the big
Thank you.
report. He's just got them, so you're not having to pick
These are all in the-
pages.
the statements we have.
Thank you.
Just in a different order, and I want to go over how they relate to each other. The last statements in the report, or what I'm putting here first, what happens is we separate out a lot of the town's records into different funds and different statements. Generally accepted accounting principles in 2003 changed the entire reporting model so that the statements we produce look very little like what you would see in a town report. So there is a set of statements in there called fiduciary statements. There's the first one at the top here, 2 pages. This information only appears in these 2 statements. The Post-Employment Benefits Trust Fund and Private Purpose Trust Funds. The Post-Employment Benefits Trust Fund is a fund established for the health insurance for retirees of the town. 6 or 7 years ago, the entire liability became fully accrued on the financial statements. Years before that, it was being phased in, and the Government Accounting Standard Board came out with a new statement similar to what they did with pensions and said, no, let's just put the whole liability on the books all at once. That's what it is. So town started, especially when that happened, town started establishing a trust fund to pay for those benefits. Unlike the pension liability, the county's assessing you over a 30-year schedule to pay for that liability. The Post-Employment Benefits Trust Fund, you're on your own. So Foxborough is doing what it's doing, and other towns are doing what they're doing, and they're completely different based on what they can afford or how they decide to approach it.
Incidentally, that's the OPEB, just in case it just went by, that's the big one that we've done.
Now,
Bob, to your point, this is not for Norfolk, just for Foxborough. Not for Norfolk.
just
County.
Foxborough,
Okay.
yes. We're part of the county for pension. Every town or district within the county is on their own. for funding their OPEB liability. Foxborough has done very well in approaching it compared to my other clients. They took a step back last year and didn't add anything to the fund, though. We always recommend...
We are catching up, is the plan.
Just one more.
Just one more, yeah.
Yeah. Obviously, your pension appropriation is part of the operating budget. We think that's the best way to approach it. Approach it just the same way you approach your pension liability. Make it part of the operating budget, not a separate article to be bargained or, try and get it part of your normal operating system so that it becomes routine and you continue toward funding it. I still have one client that has zero. So it does vary. The school districts have had a problem. They've been late to the game as well because they're unique depending on the town's funding as well. So they have their own,
Bob, the school is in our OPEB.
your Foxborough schools are in
Right,
your liability.
right.
And this trust fund is to fund everybody's future benefits.
He's referring to to one of these, like, multi-town districts where they go.
You're part of a vote
Yeah.
system,
Yeah.
and they're having trouble getting members to fund the liability for that system.
So Bob, what's the private purpose trust fund?
Those are trust funds that are specifically for the benefit of an individual, not for the town. So mainly they're scholarships. You could have, I forget if they're all scholarships for Foxborough, but you could have some that are for needy and poor, type of welfare fund. Sometimes there's veteran ones.
Mostly it's the
And
scholarships.
that's why they separate it out. That information only appears here because it's not really for the benefit of the town,
Okay.
but we manage them.
So George, we're gonna fund OPEB in November, right? Town meeting?
Yes, that would be what the plan is. I mean, if
You
everybody
don't want Brian to
votes for
stand
it.
up and ask you the question again?
Yeah, so,
The next set of statements, after, in the packet I handed out, 3 pages that have to do with the town's enterprise funds. Now, the town doesn't really manage the enterprise funds on a full accrual basis. And in the financials, they have to be full accrual. So we do offer up some adjustments to make them full accrual, adding in the fixed assets and the debt, the OPEB and pension liabilities, et cetera. So there's a balance, a statement of net position for water, sewer with a total. The second page is the P&L for the enterprise funds. And the third page there are the cash flow statements for each of the funds as well. We classify things as a business type operation if they are managed in order to pay for themselves. We occasionally run into a situation where it's not an enterprise fund for the town, but we have to convert it to an enterprise fund for the financial statements. They may carry it as special revenue but we have to, if the information is encapsulated that we can create an enterprise fund, we have to do that. So the town has a water enterprise fund and a sewer enterprise fund. And the net positions are both in the positives, despite the OPEB liabilities and the pension liabilities. The third set of statements in the packet, this is not in your financial statements. I wanted to show you what we start with. The town operates on the Uniform Municipal Accounting System called UMAS in Massachusetts. It's a regulatory system, tries to accommodate toward generally accepted accounting principles a little, but not quite. So you may see this in town reports or other documents, having been on the advisory board. The town has general fund, special revenue funds, capital projects funds, then the 2 enterprise funds, and then trust and agency. So there's a balance sheet for that and a P&L. this is what we're preliminary start with before we convert to generally accepted accounting principles for the town. So if, the packet after that, if you hold out that balance sheet and look at the packet after that, you can see how things condense down. Generally accepted accounting principles say you have a general fund, and then you combine all your government funds into one fund called non-major. So your special revenue, your capital projects, and your trust funds get all combined into one non-major fund. But then we have to go through a mathematical calculation. If something exceeds, some operation exceeds 10% of assets, 10% of liabilities, or 10% of revenue, or 10% of expenditures, we have to break it out and classify it as its own fund, referred to as a major fund. So in this case, everything got combined into one fund, but then we broke out the school building project, mainly because of the, I think the debt exceeded the percentage calculations. It has to exceed 10% of the government operations, and then a combined 5% of government and enterprise operations. So we have to go through quite a bit of mathematical summary in order to determine if something is a major fund. Now, the school building, it had 13 million in spending too, so that was probably the major reason it kicked into a major fund. This will probably stay a major fund until the project is completed. Later on, even if it doesn't meet the mathematical calculations, we recommend, you can voluntarily say, I wanted a major fund anyway. And we usually recommend, if you start with it, you might as well keep showing it until the project is closed. And that usually happens when the final bonding happens, and you're down to a couple $100,000 in the fund, and you're essentially done with the project.
And we're very, very close with that right now.
Now, this set of statements is essentially cash basis. You got general fund, your school building major fund, and all other government operations, except it doesn't have the OPEB trust or the private purpose trust funds because we carved them out. The one thing when you look at the general fund and the unassigned fund balance, it's got $9 million in there. But you can't get real excited about how much money is there because generally accepted accounting principles required that we move the stabilization fund to the general fund. And the regular stabilization is in that unassigned number. And that was $4,200,000. We also moved the capital improvement stabilization fund, and that's in the assigned column. We put it in the assigned because since you voted to have a type of purpose for the trust for that stabilization, we felt it fit the rules for calling it an assigned fund balance. The assigned fund balance has the stabilization, capital improvement stabilization fund, and encumbrances. The committed fund balance has carry forward articles, and the restricted has some other funds that are legally restricted. I think they're bond premium monies. So there's a balance sheet and a P&L. And that essentially, we started with the town's type of statement, and condensed it down to this. It's practically cash basis. There's a few minor receivable accruals, but not large accruals like real estate taxes or anything. The next set of statement is the full accrual statements. This is where we have one column for government and one column for business. The column for business is a summarization of the prior statement you saw for water sewer.
Hey,
And some
Bob,
numbers are-
what's the page number?
12.
Page number is 12.
Thanks.
12 is the full accrual balance sheet that they now call statement of net position. The business type entities, the numbers are the same as in the prior enterprise fund statements because they're full accrual already, so the numbers are the same here. But the government activities, we go with full accrual mode, and we add in bonds payable, fixed assets, post-employment benefits, pension liability, capital leases, compensated absences. So we go from a $13 million cash basis I'm sorry, a $25 million fund, cash basis fund balance for the government funds to 45 million with vastly different pieces, like the net investment in capital assets and the net position on page 12 for government activities is 82 million. That's predominantly your fixed assets minus debt. And the unrestricted, because of the pension and OPEB liabilities, is in the negative by 51 million, which is why the town has to continue approaching its OPEB liability, and the county has to continue addressing the pension liability, because that's the main driver on why your unrestricted number is in a large negative.
Yeah, Bob, I'm sorry. Yeah, to your point, the 51,895,061 number in bracket. So where can we see that number in a previous page, a document? In other words, the detail of that, call it 52 million.
Which number?
This 51.
Unrestricted, the 51,895,061, to your point. So where can we see that in any previous schedule that you provided us?
I'd have to get a backup schedule to show you.
Okay, understood. But to your point, this is what again?
This is your unrestricted fund balance. This is what's remaining after all funds that are restricted for purpose, like grants, gifts, funds, revolving funds. It's essentially your general fund plus all your other liabilities hitting it.
But it's a deficit number, right?
Yeah. You know what the deficit, I think that if I'm wrong, you tell me to be quiet. I think the largest portion of the drawdown is this includes, you know how like Bill is always coming out saying, we've got an OPEB liability of 30 million still out on the books? And then the other thing is the pension, there's a liability out there of some excess. So what he's doing is he's putting that, I don't want to call it fictitious, I don't know, this number, which is what they're saying that both these entities need to be fully funded, and that's what the I mean, am I right? That's pretty much the biggest chunk of it?
Yeah, mainly it's all the other liabilities, because
Right.
the fixed assets goes to the different line, the other line, in net investment in capital assets. One thing that might help is, on the cash basis statement, its total fund balance was 25 million.
Yeah.
That was page 15. And this, on page 12, was 45 million. The next item in your packet is a reconciliation that shows how we go from a predominantly cash basis to full accrual. It's page 17. It starts out with your 25 million, then shows all the changes that are made to go full accrual, which is $113 million, mainly in the fixed asset section. Accounts receivable, 2,000,006. Accrued interest of 260. Then all the changes, all these other liabilities that come in for the year. Bonds payable, 30 million, capital lease, unamortized bond premium, net pension liability, inflows and outflows related to pension liability, compensated absences, post-employment benefits, deferred inflows and outflows related to post-employment benefits, and landfill closure. So we go from 25 million, kind of a cash basis statement, to 45 million when you add in all these pluses and minuses to go full accrual. Now, these are the total fund balances, which doesn't explain the unrestricted part you were asking about. I can provide a schedule to show how that 51 million came about. I can provide.
No, that's it. But to your point, the biggest drivers are on page 17, the net
Yes.
pension liability
Right.
and the post-employment benefits. Those
And the debt.
And
Looks like
bonds.
the bonds payable.
and the debt, thank you. Okay, no, that's fine.
The bonds payable go against the net investment and capital assets part. But most of the other liabilities, mainly pension and OPEB, go against the unrestricted fund balance. The full accrual of real estate receivables helps that fund balance too, but not enough. So,
Because remember, we do collect something like 99.8 or something
this
percent every year.
two-page reconciliation sheet, page 17 and 18, shows how we went from a cash basis fund balance to the full accrual. The second page shows how it went from the P and L for the year to the ending P and L on a GAAP full accrual basis. So one brings in all the liabilities and fund balance to fund balance. The other one shows how it changed just for the 1 year. Since there's two sets of statements on a different basis of accounting, that's why we have to have this reconciliation between the two. Now, the statement of net position, page 12, it's followed by a two-page, essentially P and L. Page 13, the middle page. I don't agree with the whole reporting model, the way they did this. It doesn't really fit Massachusetts. They tried to do a P and L by showing the expenses for general government, and then show the revenues for general government and get a P and L for general government.
I'm sorry, who is they?
The Government Accounting Standards Board that promulgated general accepted accounting principles for this.
Okay.
So you can see on the education line, on page 13, it's negative 25 million on the far right. Now, Massachusetts, we fund our programs with real estate taxes, motor vehicle, money from the state that isn't attributable to any one department. So every department's going to show a loss. You know, if we charge tuition for school, this might be a better, attribution, but all these negatives are offset if you go to the third page and see all the revenues that come in, mainly, the town operates off of real estate taxes and motor vehicle taxes. Most of the revenue is not identifiable with a department. So, the net P and L for the year was good. It was 9 million. On a full accrual basis, however. Doesn't mean you had any more free cash than you when you go to the other basis. But So-
I have a question.
I kind of want to go through to show you that there's like 4 or 5 different
That's fine.
sets of statements here that are all different, on a different basis of accounting. But there are reconciliations between them. And what we start with is different as well.
I'm not used to seeing municipal or
Yeah.
financial statements, but in the private sector, usually we have 2 fiscal years, prior year and this year. Would it help if we see, the glance fiscal year 20 and 21, so we know we did better in 21 than we did in 20?
Well, I don't even know.
You're talking about comparative?
Yeah,
Yeah, the reporting model doesn't have comparatives. There's so many statements, it'd be unwieldy. I've never seen,
okay, I'm just asking.
Yeah.
I'm just looking at it because it looks good, but I don't know, are we better off this year?
Right.
We're better off last year?
no,
George, where's the ambulance receipt? Is it in a fire department, or is it reflected somewhere in here?
The ambulance receipts would be, I'm trying to, on this particular, I don't know, it fall probably what, under the regular general?
well, on the full accrual one, it'll be in the
Which one-
charges for, page 13, it'll be in the charges for services, under public safety, I believe.
Okay.
But wouldn't that have also, Bob, more than just the ambulance? There's other things, it's
Oh,
mixed in with other stuff.
Yeah, this is, on page 13, we had to review every revenue line in every fund of the town and classify it as either a charge for service by department, an operating grant or contribution by department, a capital grant or contribution by department, or those other categories on the next page where we couldn't identify them with a department, which is most of the revenue anyway.
I would probably go out on a limb and say that the charges for services, when you're looking at that 4 million, the better part of it, is probably the ambulance fund.
Ambulance is probably the biggest piece in there.
Yeah, but not, there's still other pieces in there.
If we go back to the page 12, the net position, the unrestricted number, the negative 51,895,000, if I removed post-employment benefits liability with its deferred inflows and deferred outflows, and the pension liability with its deferred inflows and outflows, it'd be a positive 8,000,008. So, and those liabilities have only, over the last 4 or 5 years, become fully integrated. They weren't integrated at all 15 years ago, nothing. Then they started a procedure to phase it in, and then they changed the rules again and brought them both in.
When you say they, this is statutory, so all the towns are doing it, or is it, who's they?
The Government Accounting Standards Board.
Okay,
Nationwide standards.
got it, okay.
Yeah.
So George, that unrestricted number has been coming down every year, right?
You mean that for the OPEB and what have you, each time we make
Yeah.
a thing against it, it keeps
Yeah.
depleting, and I mean, of course,
Yeah.
there's things for the stock market, I mean, it goes up and down. I mean, I don't even want to mention the stock market
Yeah,
this
yeah,
year,
yeah.
but I mean,
Where you see deferred inflows and deferred outflows on what is essentially a balance sheet, that's because the actuaries, the rules are, if you had a huge gain, they don't let it hit your liability right away. And they defer it, and they smooth it in over a 5 or 6 year period. So there's factors on both sides, inflows, outflows, both for pension and OPEB. But they both affect the fund balance. So when I mentioned how you'd have a positive 8,000,008, I took those into account. Just to show that, if it weren't for those, you'd be showing very good unrestricted balance as well.
to Larry's point, I think, I'm gonna be, I forget, it was like around another 4 to 5 years. Both should be almost gone. I think it was, what was it, 28 or something we keep talking about where it's.
The year keeps moving forward, right?
Yeah,
It keeps
well,
inching.
it
It was
fluctuates.
2035 when I started.
Something, okay, so, all right, so you're talking, it's slowly condensing, but just on a side note on this, I think it's just something to keep in mind, and you guys have all been on the finance committee, and now you're on the selectmen. One of the things that liability, like Bob said, I've been in town, they've done zero, okay? And I came from a place where I think we had 50,000 in there, but we had about the same liability out there as Foxborough. Later on, Moody's and Standard & Poor's are gonna start looking at this and say, well, what have you done? You got a $50 million liability out there, you haven't done anything, and it's gonna be held against whatever town hasn't done anything with it, whereas we're in i.e. Foxborough is in a pretty good place.
Page 75 has the actual liability over the last 5 years, on the OPEB piece anyway.
Did you say page 75, Brian?
Yeah, so-
Yeah, when this first started 7 or 8 years ago, and people started these trust funds because of the liability, Moody's, Standard & Poor's, the bond rating agencies all knew about this liability anyway, and your ratings were calculated knowing there was a liability. And everybody was in the same boat, and nobody was going to be punished any different than anyone else. But now, years later, if you're significantly funding and someone else isn't, it will show up in the ratings, town compared to town, absolutely.
I would love, I've made a joke with Bill many times about this, I'd love to somehow say, this was my doing, but truthfully, this was all done prior to my ever getting there, and it's more a function of current finance committees, ex-finance committees, ex-selectmen, current selectmen, and town meeting votes, so the town's done a good job in that area.
The other thing I always like to point out is on page 69, it's got the potential swings in the pension liability based on changes in interest rate. And so we talk about all of that coming home in 2028 or 2032, but
Yeah.
a 1 point swing in interest rate can swing it pretty substantially either way.
Right.
11.5 million in one direction and 10 in the other.
The last statement in the packet I handed out was the budget statement. Generally accepted accounting principles says this statement can be a statement if the town chooses to have it as a statement, or they put it way in the back in the required supplementary information. We've always recommended, and the town has agreed, that this should be a major statement. I think it should be a major statement because that's what you operate on locally. I mean, this is what you see at town meeting, not these exact numbers, but you operate, the town operates based on a budget, not only for the general fund, but for sewer and water as well. That is presented as a major financial statement. The net plus for the year is mainly from returning budgets of $2,788,000 unspent for the year. Revenue just missed projections by $55,000, but out of $73 million projection, that's not too bad.
And that was one of the COVID years, too.
Yeah.
They are changing the reporting model on how to do the statements and put them together in a few years again, and they will kick this statement out. It's going to be in the back of the footnotes. For some reason, they philosophically don't think it belongs up front, and that's why it was an option when they first did this in 2003, the last time they changed things. But I disagree, but in a few years, this will be in the back instead of the front, but I still think it's important.
And I could be wrong, I want to make sure that I'm not, like swinging somebody in the wrong. That final piece there that says this is your budgetary fund balance, I think from there, the Bureau of Accounts, they take the outstanding receivables and that becomes the free cash.
Well, mainly that's because the town probably voted to use part of its
Yeah.
free cash
Yeah.
or
Right.
other funds to fund the budget.
Right.
So you're going to show a negative there,
Right,
just because you used free cash.
right,
Yeah,
exactly, okay.
not because you had a bad experience.
No, understood.
Right.
Can I just clarify one piece, just for my own edification? So these various schedules are prepared by all you, not the town?
We take the town's records and go through an extensive conversion process to generally accepted accounting principles. I sit down with George and provide him all the entries and worksheets so that I can document I'm independent still. If I didn't do that, I wouldn't be independent, I'd be part of management and couldn't issue an audit report. So we go through extensive documentation, and I provide you conversion worksheets and entries to working trial balances. The state put out a manual on how to take town records and go to generally accepted accounting principles. We provide worksheets that match that manual to them. We also provide some preliminary entries to working trial balances to get to the beginning point of that manual. It wasn't complete, didn't have everything. But I sit down with George and in excruciating detail go through it all. It's much easier for me, who's done this hundreds of times, to prepare 20 sets of statements with all these complex changes than 20 different town accountants trying to once a year do it. It's just far more efficient this way. Not that they can't do it, but it'll take far more time.
But it also sets up another wall between us and somebody else, so otherwise you could kind of just come in, I'm making sort of a joke about it, but it's, we're good this year, because I'm looking at my own work or mine and Marie's work, so so it's really them doing it.
We're very fierce about the independence aspect. In the beginning of the statements, there's a section called Management Discussion and Analysis.
Right.
And the word management is in there. So I won't prepare it at all. Some of my competitors will say, Here's a template and change a couple things and it's yours. We provide the tables that come from the financial statements, but we do not provide any of the verbiage or analysis.
And how long have you been working on the Foxborough?
Not sure, before Randy Scollins was here.
Okay, so why?
Yeah, a long time. I'm just curious, how is fiscal year 22 audit going on? The one that just ended?
Sorry, I can't hear that well.
Oh, the audit for fiscal year 22.
This is 21.
This is
He
21.
just finished that.
Yeah, yeah, I'm asking you the
The
status.
new one, he hasn't started.
You haven't started yet?
I received the ledgers
Okay, that's fine, I'm
a couple
sure.
days ago.
So we probably won't get that until sometime early next year, maybe?
It'll be much earlier than this one was. This is the last vestiges of 2 years of COVID,
Okay.
with town halls being closed and
Yeah.
things. We're now back on schedule and
All right. The reason I'm asking, I
It's a
know,
March
I know
30th.
this is 21, it's a long time ago.
March 31st deadline for the single audit report. For the other audit report, the town has more than $750,000 in federal expenditures, so it has to get a federal grant audit. They've always had that pre-COVID, so that didn't matter. There was just a lot more grants to be, like 2 million extra in grants.
And they changed sort of like everything else that had to do with COVID. They changed, they pushed back the goalpost. Like when you had already finished the single audit, now we have to add all these other things added, so you had to come back and start it again, so. it was-
They kept changing the rules a lot of times because
Yeah.
every time they couldn't figure out how to spend the money and it wasn't getting spent, they said, oh, we gotta liberalize it so you can spend it.
Yeah.
Same on the reporting. It was a brutal 2 years.
Yeah.
I have a question again. If we were to go back to page 12, sometimes I tend to look at the balance sheet, which is where you can see pretty much everything, and think of bit. I understand this is from an accrual basis, but to understand basically where the cash is coming and where it's going. So if we take 2 minutes to just go through it, big picture, okay? On page 12.
Yeah.
So let me know if I'm wrong. When I look at the current assets, right, which is cash and investment and so on, if we look at both the government activities and the business type, summing them up, again, big picture, from the cash and short-term investment and also investment all the way to other assets, it's roughly $56,000, roughly.
56 million?
In other
or
words,
1,000?
sorry, 56 million,
Yeah,
my
okay,
mistake,
yeah,
thank you.
okay.
Million. So from the 46.5 million all the way to the 47,000, it's roughly $46 million, roughly.
Yeah.
In my mind, I'm saying to myself, is it enough to cover the current liability? So if you look at the current liability from the accounts payable of 8.6 million all the way to the bonds notes payable of 5.1, it's roughly $15 million. So at least in my mind, at that time, I know we're talking about 21, 56 minus 15, more than enough to basically cover the short-term need. So from a big picture. Now, if I look at the other portion of the asset, the non-current, the capital asset, this is, it's non-cash, right? So after amortization, we have $157 million in everything, buildings and so on after amortization, right? Now, forgetting a bit, let's forget a bit more about the deferred, but the non-current under liability altogether is roughly $130 million between the post-employment benefits, the net pension, and the bonds and notes payable. So to me, that $130 million, that's really was the driver of the what's below the unrestricted, meaning that as a town, quote unquote, in 21 we were solvent to the tune of $69.6 million. But I'm just trying to understand from a cash standpoint, the biggest driver of that is the net investment in capital, which is the asset portion, it's non-cash. But big picture, again, to me, what's worth noting is all the non-current into the liability. Because eventually this is saying that we all have to find a way to pay for that. And right now, if you look at just the 56 million in cash, we haven't yet, it's all what's owed.
Well, can I just,
See what I mean?
but I think, and I do have a question that I think relates to that. So this statement, the first one you showed here, right,
Which
Right.
page?
That's just the assets you have set aside.
Right, but so, this is for the specific to the OPEB, that we have $14 million roughly, right?
You could use that to pay benefits, yes. I mean,
But again,
right,
it's labeled as cash and short-term investments.
Right.
But in reality, that's a small portion of cash, and then it's in other mutual funds that are earmarked specific to that liability,
Bartholomew, I think
right?
he's speaking about Bartholomew. Yep.
yeah, it's all in investments, not short-term. The
Correct.
post-employment, it's all in long-term stocks and bonds, yes.
Okay.
Whatever Bartholomew has decided to invest in.
But that $14 million there is a portion of what you're showing here, that he was just referencing this cash,
The
correct?
liability on this net position is after taking into account those assets. It's a net liability.
Understood, but I'm saying this, this piece right here that he was just referring to, this cash of 26 million on page 12, right?
Right, this 26 million does not include the private purpose, I mean, the OPEB trust fund.
That has nothing to do with the OPEB trust fund.
That statement is all by itself. It does not flow into the government fund.
Oh, it does not? Oh,
Okay,
I see. your
so
point.
we exclude.
But we're showing the liability.
You're showing the net liability here. So, say the liability here is 25 million.
I get you.
That's the net liability. The actual liability before taking into account your trust fund, and you have to add the trust fund to that number to,
So Brian, to
What,
your point, the
28 million?
the 25 million, according to 25,622,958 on the government, is it net of the number of page 23?
Trying to- Page, which?
Yeah.
page?
it's after the assets were taken into account in the trust fund, yes.
So the OPEB is only 40 million, give or take, and then net the 13 million.
Why is it netted? I'm just wondering how come it doesn't show debit and credit. I'm just wondering, to Brian's point.
You're getting credit by showing the net liability. We could show the gross liability and then add the asset up there.
Okay,
Yeah.
got it.
What impact is this year in terms of inflation and discount rate, investment rate of return, things like that, as opposed to OPEB liability, which probably won't change significantly, but pension liability will change significantly. What kind of impact do you think that's
Well,
going to be?
every year, your actuarial study is going to change, and some of the assumptions may change.
Right.
And those numbers could go up or down.
Right.
And to get back to what you were asking about, this unrestricted number, the 51, is taking into account long-term liabilities,
Right,
which you don't have to pay for yet.
correct.
Whereas that investment fixed asset is your long-term assets, but we're segmenting them.
Right, and to your point, that's why I was
In a way,
saying,
there's a different philosophy going on there.
right, that's
yes.
why I was saying that to your point, if you
Right.
look at the current assets, it's roughly $56 million in
Yeah.
21. The short portion of that liability is $15 million. So we are more, at the time was more than enough to cover.
Operationally, we're taking care of our annual obligation for those benefits, and we're contributing almost every year to the post-employment trust fund.
And it's a quick last question on this one. Compared to other towns or love benchmarking, that's $70 million. Again, most of it having to do with the net investment capital of, $100+ million. How many towns are comparable to Foxboro in terms of benchmarking?
Very few. You're doing very well. I mean, your trust fund, you're contributing a much better number each year than
Doing very
most
well
towns.
compared to the private sector even, never mind the public sector.
I didn't realize, so even like in private businesses, they're forcing you to have
Yeah.
a
Yeah.
fully funded.
Right.
I thought it was just the government. I didn't realize that.
No,
Private
I
too.
forget the pronouncement, but it was everybody's.
Which is, don't get me wrong, it should be done, but,
It's the same principle.
right, same thing. I just didn't realize it spilled over into the private.
I
wanna
have
follow
one
up on-
town,
Yeah, I don't, go ahead.
No, go ahead.
So I'm still trying to get over if I'm interpreting what you're saying, you think we have whatever it is, 46 million in cash.
46.5 million, but to your point, if you add up the investment of, call it roughly $5 million.
Yeah, and again, I'm
Yeah.
just skipping all the taxes.
Yeah.
Just go with cash and short-term investments, it says
56 million,
46.
56, okay, yeah,
The top line,
46.5.
46 million.
46,509,
Correct.
yeah, all right.
And then, his point is our liabilities are only, whatever,
Correct.
15, you said.
Exactly, so to me, more than enough to cover,
But that does not, we don't have 46 million bucks sitting in the bank and only $15 million going out in the short run, right? I mean, that's a
No,
misunderstanding of the picture.
I think, yeah, I don't, because it's kind of like you're just simply looking at these numbers. We take in a year in a different mode. If you look at it, I think we take in some 86 to 90 million dollars in a year, and we're spending about that in the same year. You know what I mean? So give or take, I mean,
but that's
am
cash flow.
I getting
Well, your budget is 73 million.
73, but
And
I'm taking
but then
into
you
account
have
the
millions in
water.
grants and
Right,
revolving funds as well.
right. Right.
Maybe the other way to ask it, to rise is, how do we measure the town's health, financial health? Isn't it through this balance sheet?
This is, this is one measure on the full accrual basis, but you have to acknowledge that, towns only started approaching their OPEB liability a few years ago, even though you've had the benefit forever.
Right.
I mean, the more of a less cash basis balance sheet, which is page 16, 15, that's what you're working from.
Page 15.
I mean, in that case, as I said, your general fund unassigned number is 9 million. You've got to take away the stabilization fund that's in there, in that number, which is 4 million, so,
Hold on one sec till we find 15 here. We're all,
It was like the third thing. It
Right.
looks like, kind of looks like this. I don't know whether you got an X-ray vision, but it kind of looks like
page
that.
15 is your,
okay, so, all right, say that again then, please?
page 15 is essentially your cash basis operation. And the unassigned fund balance of 9 million, that includes your stabilization fund of 4 million too. So, there's about $4.5 million in undesignated fund balance, which I'm sure was reflected in a fairly good free cash in '21. I forget what your number was that year, but the total fund balance is 13.6 million. But, the other numbers are committed. Either articles carried forward for spending or encumbered invoices from the prior fiscal year that are yet to be paid. So, $4.5 million is essentially the general fund's unrestricted number. It's not committed to anything.
Well, this is even a bigger picture in terms of
Right,
cash
the cash-
basis on
the
page
cash
15.
basis, what it
Much
does.
better picture.
When you look at page 12, the full accrual one, most of my towns are in a negative on the entire number.
Really? Compared to the 69.6 million?
Yeah, when you look at your $45 million net number on page 12,
Right.
a lot of governments are negative on that number right there, which if you look at private enterprise accounting, you'd be saying
You're
you're a going
dead.
concern issue.
Yeah, yeah.
Well, I mean, I've sat through a lot of audit committees, and mostly what you do at an audit committee is, we talk about how well the audit went, and what were the deficiencies, what were the issues that were involved. I'm assuming the numbers are generally correct.
Yes,
And then when you look at the Standard & Poor's ratings, I would imagine they look at all of this stuff in detail, wouldn't they? Because I've been through that.
Yeah.
And how many towns have a AAA rating, from Standard & Poor's, so I think that the town, by all external measures, is doing well and is in good standing, but I'm more interested in how'd the audit go?
Sure, the audit went very well.
Is there a management letter? You generate a management letter as part of your audit?
No, there was no written management letter. We make oral comments to management.
Right.
A few years ago, well, it's some more than 10 years ago now, they came out with a new audit standard where we're required to report in writing to management if there's a material weakness
Right.
or enough significant deficiencies to constitute a material weakness
Right.
where your statements could be misstated.
Right.
And we have issued several of those over the
Right.
years, not to Foxborough. Foxborough
Right.
does a very good job.
Right.
Foxborough did the best job of any of our communities on the COVID grants because it was very difficult and messy. And they did I have significant problems in other communities that I didn't have here on those grants.
I'm gonna give that to Marie. She kept spreadsheets, and you asked her for a journal entry, and it was there.
Right.
Marie does a very good job.
So did you give management any comments this year for 21?
Verbally, I always mention there are certain things you always have to be aware of. Cybersecurity, especially when it comes to public safety and education, because there's very private records there as well. Always, disaster recovery. I work in some town halls that are brand new because the other one burned down. How would you operate your business tomorrow if you had a large disruption? How would you pay bills and pay payroll and process transactions? So a lot of that now is moving to cloud-based systems and things like that to help in that vein. And also doing an annual internal assessment of your systems for vulnerabilities.
But to Dennis' point, as far as financial reporting, there are no material weaknesses.
No.
Okay.
I'll add
Or
one-
deficiencies.
We've had the
yeah.
misfortune to have to write some of
Right,
those. that
right,
we-
because
like-
I'm looking at the disclosures here.
We have a
Everything
town
is
not too
clean.
far from here where the
Yeah.
treasurer couldn't reconcile cash for a year and a half.
So,
And compliance is in good shape.
Excuse me?
Compliance is in good shape.
But yes, on the single audit, all the compliance went well, there's no findings. It was a clean single audit report. And those are unusual too.
Right.
I mean, I think there's been some findings a few years ago,
Which I think,
which
Bill, you've
don't
got
always get
fixed.
addressed, and we're in good shape now.
Yeah.
Bob, can I follow up on Dennis's question there? So I read through, you have a couple of scope statements in there, and one of them, you do talk about controls, and you talk about you're not opining on the efficacy of the controls, you're opining on the fact that they were enacted correctly. Is that a fair reading of that, or did I misread that?
Excuse me,
At least twice in the document, you talk about internal controls and the efficacy and what you were actually opining on. Like there's a
Right.
caveat in the language.
right, the internal control letter here that's related to single audit report does not opine on them, but we didn't find any reasons to report anything. I'm not sure if that answers your question or not, but
Yeah, you keep going. I'm going to go find the exact language that caught my attention.
Can I ask, so who presents the management discussion analysis? Is that
It's done by,
no,
done by?
no, the MDNA,
MDNA, that's you,
we do it.
That's George.
We Todd do it?
okay, all right, yes,
Yes.
yes, Todd has it, yes, okay.
Can you explain the federal, I'm just curious, the 750,000 threshold, and then, page 9, and then you have a,
That's in the single audit report.
yeah, I'm just curious, what, just for information, what's type A, what's type B?
Okay.
Oh, this one, the,
Was it one of his handouts?
yeah, the one I want to hand out.
That gets into some technical definitions of
Okay.
numbers when we're looking at grants and whether they've been audited before or not, or they new or not. We go through a whole flow chart in order to determine what federal grant audit needs to be audited based on factors of whether it's a bigger, large new one or a large one that hasn't been audited in 3 years.
Okay.
We go through a process on that.
And then it says we don't qualify as a low-risk auditee. So we high risk for, did you see this thing?
Yeah, I saw that.
Or are there a lot of thresholds you have to clear
one of those
in terms of?
disclaimers.
All the way in the checklist at the end, it does say we don't qualify for a low-risk audit, but statutorily, that it seems to be a bunch of thresholds.
That goes back to, you have to have had no findings in
Yeah, last page.
over a 2-year period. So I think there was probably a finding in the prior audit. And the next one will be a low-risk auditee, I believe, with this
Okay.
one. If that one's clean and this one's clean,
The next one, then.
you
yeah.
qualify the next time.
Gotcha.
And I'm trying to remember what it was. It was something that was fixed by Bill Yukna rather quickly.
I think it had to do with teachers signing off a certificate in a timely manner that they're working on this grant.
That's what we call a C finding. That doesn't sound very major.
Yeah.
Let me just run the language by you real quick. In making those risk assessments, the auditor considers internal controls relevant to the entity's preparation and fair presentation of the financial statements in order to design audit procedures that are appropriate, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. Accordingly, we express no such opinion. I just didn't fully get the context.
That's according to the audit standards. We can't opine on the internal control system.
Okay.
You could do a separate engagement, to do that, but
Yeah, I was going to say that.
we
I mean,
just
if we-
opine
if
on
we
the
wanted
financial
you to-
statements.
To do a deep dive on internal controls as a separate engagement, we could do that.
Right.
Right.
And on
But you
the,
don't see any reason for us to do that, I guess implicitly.
sorry, I'm having a problem hearing you.
Oh, you haven't seen any reason to suggest, either, to management or to the committee that we should consider
Oh.
doing that?
Oh, yeah. The audit went well and everything we looked at well. We wouldn't be suggesting any deeper review of any system or department in any way. I just want to mention on the low-risk auditee, sometimes it makes no difference on what we do, because it lowers the percentage, but when we take the larger program, it exceeds the higher percentage anyway.
Okay.
So, that makes a bigger difference when you're auditing a large university with 100 million in grants.
So
and
George,
things.
from an administrative purpose, prior years, once this report is done, is it reported to the selectmen? Or what's the process for audit committee?
In prior years, prior to having the audit committee actually reformed, we've sat down with Bill and Mike, and I think the very first year that I was here, which was 3 years ago, I came in the first night that I was here, and Bob
Yeah,
was
we-
sitting before the Board of Selectmen and doing like what we're
So
kind of doing.
have
We
you
present to
reported?
the board as requested.
Okay,
We don't ask for it
Correct.
or require it.
Correct.
But we're certainly happy to do so. if
I'm
they-
just asking, what should we do? I mean, we looked at it, okay, fiscal year 21, it's a clean audit, no issue, so,
I think that the assistant town manager sat into that session where I went through all the excruciating detail on how it all got put together. When, I often ask for the administrator to be involved, because while it's not fun to go through because of the detail,
right.
they always pick up something that is useful in their knowledge of information. I always find they pick up something that might be useful to them either now or a year later, a couple of years later.
So I guess what I'm asking is that, where does the responsibility end? Are we done? I mean, I know Bob reported the audit committee, so we're good, but what's the next step?
I think that, I think according to what I had seen with I think you guys are going to say something like, let me see. Findings and
I
regular.
mean, it says report, it says duties of the committee, report
Yeah.
to the town on findings, recommendations, and corrective action taken during the preceding 12 months. Of course, it's a little tricky as there were no findings, right, and no recommendations for corrective action, so I don't know.
And I think when you're saying you're reporting to the town, I guess that would be the Board of Selectmen.
Correct.
Or the town meeting, could be either.
Yeah, so, well, you're doing it on TV, of course, but I mean, I guess maybe to just close the loop is something you take some.
If somebody dialed into the audit committee and is watching this, I love them, but that may not be, that might not qualify as a full report to the town. I'm just putting that out there.
Right,
I mean,
right.
George.
Yes.
If you look at the responsibility of audit committee, the last one.
Yes.
First thing is the audit committee makes the recommendation to the selectmen of the selection of the company. So I know we probably never did it in the past.
Right.
But that's our first thing we have to do is for fiscal year '22, I guess.
Well, I believe, and this is something you might want to talk to Bill about. We have a, I don't know, a letter, what is it, for the next couple of years anyway,
Yeah.
right? That was signed by Bill a while back, and again, during the COVID, which I think if I was to sweep back around, when I said the first year that I got here, Bob had done this in front of the Board of Selectmen. Then, of course, almost immediately after that, within 6 months, everything went the other way, and then we weren't having any big meetings at night, so it just didn't happen, for the next couple of years. It was done more in with Bill and Mike, as opposed to the Board of Selectmen or whatever. But I believe Bill, I don't know how many more years there is on it, but I think that they had done something where they had what is the word for it? A letter of intent to do for the
RFI,
next.
RFP.
Yeah, so there's something been signed for another year or so anyway.
Right.
For the audit.
Now, the reason I'm asking is I just want to make sure that the audit committee, we're doing what we're supposed to do.
Right.
And if we have to,
Right.
if we have to report to the
Right.
Board of Selectmen, we'll do that.
Well, you're the chair now.
Yeah. So
Make sure we do it.
I will make sure we do.
I mean, we might be backing into it, but it is.
Now, what I can do is I could probably write it's a fairly clean audit, so it's a short, half-page, one-page memo.
Yeah.
We'll share it and we all agree. I'll send it to Leah, the selectmen. That will be our audit committee's report.
Right.
And now, this is just to make it clear again, to elaborate on what Dennis and Paul mentioned. So this is really a limited scope audit, right? And more importantly, it's based upon the financial controls provided by the town to the auditor, right? In other words,
I'm not hearing well.
I'm
enough.
sorry.
He's got
I'm sorry. This is a limited scope audit in nature. In other words, basically, the audit is based upon the town finance manager providing you with the town's internal control. So this is basically an assessment that the town's financial internal controls are satisfactory.
Well,
No?
internal controls underlie the systems. We're opining on the financial statements. So we found enough evidence to give our opinion on the financial statements.
Okay.
That did include a review of the controls and testing of controls. We did not have to write a letter that controls have such deficiencies to be a material weakness. We didn't have any significant deficiencies or material weaknesses. So we did not have to write that type of a letter. But we do rely on our testing as part of our documentation to rely on the systems in order to give our opinion on the financial statements. But that did include a lot of substantive work. Certainly we review the bank reconciliations, the receivable reconciliations. We get a confirm from the state that verifies all revenue that came from the state, which is multi-million dollars of amounts. So while we don't opine on controls or make recommendations, they are part of the underlying work we did in order to form evidence for our opinion.
Yeah, and I didn't want to mislead anyone. This isn't materially different. I've been through many in the private sector, though.
Right.
And I did work in a public organization for 12 years. This is not materially different than what I've experienced in terms of the audit. What was different was what was being reviewed in front of us in terms of how the actual audit was conducted and, what you found, what you didn't find, and just putting your stamp on the outcome of the numbers and the reviews. you know, and giving us a comfort level that this is a solid audit. You know, I mean, you didn't find anything major, you didn't find, you know, serious deficiencies.
Foxborough has done a very good job for many years. I mean,
Right.
not enough audits that it wasn't always as good as it is now, but it's improved over the years.
So now that we're out of COVID, so what is a realistic timeline, just so I understand, for 6/30/22? So like, what, just walk me through
Well, right now,
what happens.
there's two requirements you have right now. I believe that the single audit deadline, because of COVID, had been extended out to September, prior to audit years. I don't think it's been extended this time. So the intent is to meet financial disclosure for bonds in March, as well as the single audit deadline, or sooner. We just got the records. Marie sent them to me a couple days ago. I'm gonna get to work on those next week. And once I do all my work, I do a lot of financial review work of the ledgers in depth. I develop statements first, and then I send the staff out.
And kind of swooping back around to Dennis's point, on top of it, all of this has to be reviewed. You mentioned, well, look, Moody's is looking at it, and then you're saying Bob is looking at it, but there is one more level. And the third level to this is the state of Massachusetts, where we're currently doing the recap sheet. And of course, that's another whole rehashing of everything that we've done for the year. And we don't get the tax rate set unless that meets all their and then there's another whole, I mean, he's shown you like 3 different balance sheets here. Now Marie's doing another whole balance sheet that shows up in a completely different format than the format that's here, or whatever. So it's like bang, bang, and it just keeps repetitiously, you know, being re-reviewed by all these various entry. But also, to your point, if we don't make that March, it's in March this time.
Well, 270 days for bond disclosure.
Yeah.
It doesn't have to be the audit. We put together financial statements in compliance for that.
Right.
And
But then we
we'll
start
file
getting,
that and then replace it with the audit later, if the audit is after that.
we get these dunning letters from, what is it, S&P, and then the Federal Audit Clearinghouse, and they start, you know, if we don't make
Right.
these
The
deadlines.
single audit deadline is March 31st.
Right.
It hasn't been extended yet. I don't think it will be this time, and it was the last 2 years because of COVID. What happened was, in the audit world, I've got 4 single audit clients. When COVID happened and all the grants, now I got 12. And it happened countrywide. They've actually eliminated the single audit requirement for a lot of towns. Now they have a different reporting. If you went over 750,000 in spending only because of ARPA, now it's a whole different kind of reporting you gotta do and a different kind of audit, because it overwhelmed the system, the single audit.
So Bob, next year when fiscal year 22 audit is done, we should preferably doing it in spring to make it flow. Then the audit committee can recommend to the Board of Selectmen before fiscal year, fiscal year 23 audit will start. Because right now, that I know, he's already started to work on 22, so there's no point for audit committee to say anything. But next year, let's just move. I know COVID threw everything up, but let's bring it back to somewhere around March, April, just have a meeting, be done with it.
We're about over the COVID hangover, the timing's moving up,
Yeah.
yes.
Okay. Any other questions? No. Motion to adjourn?
Second.
All in favor?
I-
Thank you.
Thank you.
Thank you.
Thank you.